Much like gas, food, and rent, the cost of insurance on your automobile is going up.
That's right, but it won't affect all drivers. The cost changes depending on where you live in the country. Currently, the cities with the most expensive insurance premiums are Detroit, Tampa, and Miami. Drivers spend more than $3,500 a year in Miami. On average, drivers nationwide spend more than $1,700 a year on their auto insurance premiums, and that is more than 2.5% of the average household income. Now, that may not sound like a lot, but it certainly adds up when the overall cost of living has gone up too.
$1,700 sounds like a lot.
It does sound like a lot to me, I gotta say. Joining us now to break this all down is Sarah Foster from New York City. She is an analyst at bankrate.com. Hi, Sarah, great to see you. So the rates are going up. I'm surprised that New York City was not on that list. But why are the rates going up?
Yeah, well, thank you so much for having me. And I think what we really see here is this is a story of inflation kind of hiding in plain sight. Month after month, as drivers have seen prices ratcheting higher, reaching a 40-year high most recently in February, it's been a pretty common story that used vehicles, new vehicles, even tires, parts, and equipment, those are all getting more expensive. But I think one of the reasons why economists like to say that inflation in motion stays in motion is because of auto insurance, as an example. When it becomes more expensive to repair a vehicle, to pay for these new parts, to pay for a new vehicle itself, a lot of these premiums will ultimately end up increasing. And what we found through the Bankrate report is that a lot of this depends on where you live.
I mean, sounds logical, costs more to fix the car, so they're going to charge you more ahead of time. But, you know, like driving safety has improved, fatalities have declined, accidents have gone down for years and years and years and years and years, and yet the rates keep going up. So my question is this the new normal, these higher rates, or is there any shot at all I might open a letter that says, congratulations, your rate has gone down?
Well, I think it really kind of all goes back to the conversation about inflation and where it ends up heading. And so, frankly, policymakers at the Federal Reserve, economists, forecasters on Wall Street, they've all kind of gotten this inflation picture wrong, where they started to assume that prices would go down in 2021, but they've only continued to climb higher. So I think especially as you're an insurance company kind of looking at this inflationary environment, it's a little bit challenging to really assess where you're going to go with rates or how much higher they're going to go. But they are making decisions in an environment where inflation is at a 40-year high.
All right, so adding all of this into the puzzle of gas and inflation and everything else, this, of course, feels like just one more financial gut punch. So what common sense things can drivers do to save money, Sarah?
Get the big gulp. It's refillable.
That's right.
Yeah, well, I think it kind of all goes back to this prudent financial wisdom that we teach every consumer throughout every stage of their financial life. It really goes back to shopping around. And that's because a lot of insurance companies really differ their individual premiums because they have their own proprietary algorithms that they use to calculate what they charge a driver. But I think this kind of underscores really the importance of shopping around here because any rate will be different. And that's a lot of these companies could also offer discounts that are a really great idea for consumers to take advantage of. Those potentially could be low mileage discounts. I know this is a very relevant conversation in light of the pandemic because so many people have been working remotely and they haven't been driving as frequently as they used to. Another kind of major life event that we saw in the Bankrate report is that it's about $2,000 extra a year to insure a teen driver. If this is something that you're going to have to do eventually, you could look into good student discounts. But I think it's end of the day, it's really important to take these measures because even if you save just a few $100s a year, that's all going to add up in the face of higher prices and 40-year high inflation.
And unfortunately, you have to have insurance under the law.
Yes, you do.
Forces us all to be pessimists and expect the worst. But that is what it is. Sarah, thank you very much.
Thanks, Sarah. We're going to take a quick